In 2019, JetBlue dominated Boston Logan. Over 114,000 flights a year, nearly a third of all departures. It was their city. Delta was the underdog, 80,000 flights, trailing by a wide margin. Then Delta did something no one expected. It officially upgraded Boston to hub status and started pouring resources in. By 2023, Delta had overtaken JetBlue in total flights. By 2025, Delta carried 5.6 million passengers out of Logan, 200,000 more than its closest competitor. And now, JetBlue stock is down 40%. Activist investors are circling, and merger rumors with United won't stop. This is the story of how one airline invaded another airline's city, and the defending carrier might not survive it. Before you understand the war, you need to understand the prize. Boston Logan is unique among major U.S. airports. It has no single dominant carrier the way Atlanta has Delta or Dallas has American. For decades, it functioned as a multi-carrier airport where no airline controlled more than about 30%. That open structure made it valuable and vulnerable. Any airline willing to invest aggressively could reshape the airport's competitive balance. Boston also sits in one of the wealthiest and most educated metropolitan areas in the country. The city generates enormous premium business travel demand from finance, biotech, healthcare, and technology industries. Corporate travelers pay premium fares, fly frequently, and value loyalty programs. Exactly the kind of passenger Delta's entire business model is built to capture. And then there's geography. Boston is the closest major U.S. city to Europe. A flight from Logan to London is roughly an hour shorter than the same flight from JFK. For transatlantic routes, Boston offers a geographic advantage that no other East Coast city can match. Airlines that build a strong European network from Boston don't just serve local demand, they attract connecting passengers from across New England and upstate New York, who would otherwise drive to JFK or Newark. That combination, no fortress carrier, wealthy passenger base, transatlantic geographic advantage, is why Delta looked at Boston and saw an opportunity, and why JetBlue should have been more worried than it was. Delta didn't stumble into Boston. This was a planned, methodical takeover executed over 7 years.
The first move came in 2019 when Delta officially designated Boston as its newest hub. At the time, JetBlue was still the airport's largest carrier by flight count. Delta had been growing steadily, increasing Boston capacity by 14.5% year-over-year against the system-wide growth rate of only 4%, but it was still the number 2 carrier. The hub designation changed the calculus. It meant Delta would build a connecting operation at Logan, not just serve point-to-point routes. Passengers from smaller New England cities could connect through Boston to Delta's global network, creating traffic flows that a focus city model like JetBlue's couldn't replicate. Then came the gates. In September 2019, Delta added 5 gates at Terminal A, giving it control of all departures and arrivals in that terminal. Gate control at a constrained airport like Logan is permanent infrastructure advantage. Once an airline holds gates, displacing them is nearly impossible. The pandemic should have slowed this down. It didn't. While other carriers retrenched, Delta continued investing. By 2023, Delta had overtaken JetBlue in total flights at Logan, the first time JetBlue lost its position as the airport's largest carrier. The gap has widened every year since. The numbers today are staggering. Delta now operates 170 daily departures from Boston, up from roughly 150 in 2019. Seat capacity is up 50% compared to pre-pandemic levels. The airline serves 62 destinations from Logan, including 11 international cities. It carried 5.6 million passengers through the airport in 2025 alone. Over the last 2 decades, Delta has tripled its Boston network from 25 destinations to approximately 70. And the transatlantic push is where the knife twists deepest. For summer 2026, Delta will operate non-stop flights from Boston to 12 European destinations: Amsterdam, Athens, Barcelona, Dublin, Edinburgh, Lisbon, London Heathrow, Madrid, Milan, Nice, Paris, and Rome through its joint venture partners. 12 European cities from a single airport that Delta didn't even classify as a hub 7 years ago. The Boston to Madrid route launching in May 2026 is particularly telling. It's a direct response to JetBlue's launch of that same route the previous summer. Delta saw JetBlue open a new European market and immediately matched it with a daily A330-900 Neo widebody. That's not competition, that's suppression. Delta also opened a Delta One lounge in Terminal E, connected to an existing Sky Club that opened in 2023. Premium lounges matter because they lock in high-value business travelers. Once a corporate traveler has access to a lounge, switching airlines means losing that comfort, which means they stay. JetBlue's response has been aggressive, but it's fighting from a position of weakness, and the structural disadvantages are becoming impossible to ignore. On the surface, JetBlue's transatlantic strategy looks strong. The airline will serve 9 European airports from Boston in summer 2026: London Heathrow, Paris, Amsterdam, Dublin, Edinburgh, London Gatwick, Madrid, Barcelona, and Milan. The Barcelona and Milan routes are both new for 2026, marking JetBlue's first ever service to Italy. Every transatlantic flight features Mint Business Class, JetBlue's lie-flat premium product that genuinely disrupted the market when it launched on the London route in 2021. A new JetBlue lounge at Boston Logan is scheduled to open in mid-2026.
But look closer, and the cracks are visible. JetBlue's transatlantic growth has hit a ceiling. The airline will operate 13 transatlantic routes total across Boston and JFK for summer 2026, just one more than the previous year. Fleet constraints are the primary bottleneck. JetBlue flies all its transatlantic routes on Airbus A321LR and A321neo narrowbodies. These aircraft work for routes up to roughly 8 hours, but they carry fewer passengers per flight than the widebodies Delta deploys. When Delta flies an A330-900 Neo on Boston to Madrid, it offers roughly 280 seats across 4 cabins, including lie-flat Delta One suites. JetBlue's A321LR on the same route carries about 160 passengers. Same city pair, nearly double the capacity for Delta. The economics favor the airline with the bigger aircraft, especially when load factors are high. Then there's the network problem. JetBlue doesn't have a hub-and-spoke system. It operates a focus city model, point-to-point routes from its strongest airports. That means a JetBlue passenger flying Boston to Barcelona has no onward connection options in Barcelona. A Delta passenger on the same route can connect through SkyTeam partners to dozens of European destinations. For a leisure traveler going directly to Barcelona, this doesn't matter. For a business traveler visiting Barcelona and then continuing to Rome or Munich, Delta's alliance network wins every time. The financial picture is the deepest problem. JetBlue has posted more than 5 consecutive years of losses. Its stock has dropped over 40% from its pre-pandemic highs. Capital expenditure has been slashed by $3 billion since 2023 to conserve cash. The Embraer E190 fleet was fully retired in 2025 to simplify operations. The failed Spirit Airlines acquisition, blocked on antitrust grounds in 2024, cost JetBlue years of strategic focus and left it without the scale it was counting on. And now, Icahn, holding roughly 10% of JetBlue's shares, is pushing CEO Joanna Geraghty to cut costs further. Merger rumors refuse to die. JetBlue has reportedly tapped advisors to assess the viability of selling itself to United Airlines, Alaska Airlines, or Southwest Airlines. The airline that once defined Boston's identity as an aviation market is now exploring whether it can survive as an independent company. The real battlefield isn't domestic routes, it's the Atlantic. What's happening between Delta and JetBlue in Boston is a preview of a broader transatlantic shift. Both airlines are deploying their best premium products on overlapping European routes. Delta has Delta One suites with closing doors on its A330-900 Neos and A350-900s. JetBlue has Mint studios with lie-flat beds and privacy doors on its A321LRs. Both products are genuinely competitive with or better than what legacy European carriers offer in business class. The difference is scale. Delta's 12 European destinations from Boston include both leisure routes like Barcelona and Athens and business routes like London and Paris. JetBlue's 12 European destinations skew heavily towards leisure and premium leisure. This matters because business routes generate consistent year-round demand, while leisure routes are seasonal. Delta can sustain its European network through the winter because London and Paris fill planes 12 months a year. JetBlue pulls several routes down to seasonal only, which means its European operation shrinks every October and doesn't fully restart until April.
5 years ago, JetBlue was Boston's airline. It had the most flights, the strongest brand, and the hometown loyalty that comes from being the carrier that made Logan relevant on the world stage. Delta was the ambitious outsider, growing fast but still trailing. Today, Delta carries more passengers, flies more routes, serves more European cities, and has invested more in terminal infrastructure than JetBlue has at its own strongest airport. JetBlue is fighting back, adding Barcelona, Milan, building a lounge, pushing Mint as its competitive weapon, but it's fighting with a shrinking balance sheet against an airline that generated $63 billion in revenue last year. Boston Logan is the most fascinating competitive battleground in American aviation right now, not because of what's happening today, but because of what happens next. If JetBlue holds, Boston remains the rare major airport where two airlines genuinely compete. If JetBlue falls, Boston becomes another Delta fortress, and the passengers lose either way.